Morning, Forex traders. Gold, oil, dollar, yen. Whatever you want to do, let's go. Huh? Let's go. So, guten Morgen. Yeah. How you doing? Good to see you. Hello, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Here to conduct technical and fundamental analysis, to show you how to put together trade plans, show you how to develop skills like patience and discipline. There's more to it than just technicals and fundamentals. Patience and discipline. So please get involved. Please ask questions. And one day, when you're ready to trade real money, please visit tradersway.com. Choose them as the prime broker to your successful Forex trading business. Brooke says yens. All right. Or yens and some pigs. All right. So, please ask questions. Please get involved. Please treat everyone in the chat with dignity and with respect. Be professional. We'll go through our charts. Pretty simple. If you want my chart templates, the link is below the video. Oh, I know what I forgot to do. That's what was on my mind. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Andrew says, why do you call the pound yen the beast? That's been the nickname for as long as I can remember, probably 15 years. Where did it come from? I don't even remember. I think it came from the days when the average daily range on a currency pair was like 100 pips, but pound yen was like 250 pips. Ricardo is collecting swaps for the first time. Enjoy, Ricardo. Brooke says, yeah, that was a long time ago. Yeah, well, what am I going to do about that? All right, so sure. So we had some requests, some yen pairs and stuff. Okay. Let's go to the yen pairs. Take with me the memories. Okay, cool. So, some moves down. So you got to identify your role reversals and stuff. Okay. It's not really a weekly, not really a monthly, so it's just doing a lot of sideways action. So I got to also mark the top here. Right here seems to be somewhat important. Maybe up to this level here. Oops, come on now. And I'll take with me. All right, so not a lot to say. We're in this zone here, and really the bottom is here, and we're somewhere in the middle. So it's really meaningless. Umit says, can we look at Euro Lira? Probably not today. Lira is very, very weak the last couple of, let's say the last few days. The Lira has been very weak. And as you probably know, it's bounced to the upside off of a weekly M2. and is now touching the weekly M4. So being that it's early in the week, we'll probably get a counter trend back down, but I think you probably already know all that. But I'm just going from memory. But anyway, so looking at this CAD yen, it's range bound is what I'm trying to say. And why don't I have a drawing tool? Waiting for my drawing tool. Hang on. All right, so we're just kind of playing it like really it's this is what we're playing, this sort of range here. Of course, it could be a little higher. Sideways until it moves up. That's all. Joey says, am I still bullish, CAD yen? Well, I don't know. Bullish is too strong of a word. I traded a setup. So I'm long here, and we're here now, so it's vulnerable, right? Am I bullish? Well, I'm buying low. And then ideally, the market turns bullish. You see what I mean? The market is not bullish, so I'm just buying the bottom of the range. But then again, that's how you're supposed to trade, right? So it's not bullish yet. Am I bullish? Well, I'm buying. And if it makes a higher high above here, then the market is technically bullish, and I'm already long. And if I was more aggressive, I'd be buying somewhere in here if it turns up. Okay, I'll probably get knocked out, and I'll probably buy it again down here. Let's see if I can get a bit better of a price. But you can see I waited for the double bottom here, then it spiked up, came all the way back, and then I ended up buying it there. So whatever, we'll see. If the market turns north again and makes a higher high, I'll look like a genius. Cool. Beast. Okay, sure, let's talk Beast. Well, it went from the bottom to the top of our channel. Isn't that cool? Like, I'm going to leave. That's where we had it. So, no, sorry. There we go. So that's where we had it, and it's really cool. So here's the mean. 2 standard deviations down based on this data, which is great. And then it went 2 standard deviations up and stopped. That's cool, right? Isn't that neat? And so now it's coming back to where with the mean? Yeah, maybe. Now, if you know how to swing trade, it's a very obvious setup here, okay? And it's right back down to the bottom of the channel. Super easy. The upside, if you will, looks more like this. La 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 la. Joshua, it's because I can do whatever I want. But let's go back to that. What was it? It was the CAD, wasn't it? Okay. You have to remember, Joshua, were you here last week when we talked about the setup? When I took the trade, it has to do with next month. So I'm not trading this. This is not what I'm doing. And I'm not doing a counter trend trade, and so on and so forth. Okay? Okay. So I'm basing this on next month. So let me zoom in and so I have to go all the way to the 4 hour. But check this out. You ready? Look where I'm long. I'm on long the September, M2. You see? I'm not even looking at August. Not even looking at August. Not even looking at August. And this was last week, guys. So last week, I'm already trading September. So this is a great example. So thanks for bringing it up, Joshua. Of an amateur opens their charts and they look for a trade. What are the chances that I'm on the exact right price with the exact right time to trade right now? When I start this webinar, what are the odds that right this second we got a trade? Like a great trade with a real strategy off of real resistance at the right price and the market is rolling over? Like none. But an amateur trader always finds a trade. Sarah says, Wayne, why, Wayne, I got banned on my account and I do not know why can you, what are you talking about, Sarah? I have no idea what you're talking about. You got banned on FX Bootcamp? Well, the only way that happens is if you stop paying your credit card. Anyway, so anyways, there you go. That's what that trade is based on. Cool. Aussie is very similar. Very similar. And you go out to the weekly and you find out, oh my God, last week Wayne traded next month's pivot point. Yeah. From your stream on your... I don't know, unless you said something stupid, Sarah. I honestly don't know. So I don't know. I apologize. Yeah, you know, YouTube does that automatically if you're posting things like email addresses or Telegram addresses or all these weird things. You just, boom, you're banned. So don't know. So there you go, guys. Now here's our euro. Euro is still quite weak compared to the others, right? Brooks says, I love the volatility on the right side of the market. Yeah. Oh, Mark says, hello. What should be the best for Aussie? Go back to the Aussie yen. Okay. So are you a buyer or a seller? Because really I'm looking at this, it's really not at a good entry for either trade. It's on a central pivot, but both bulls and bears can use the central, so I don't really care about the central pivot. we're at the mean, so we're at an average price, which again is not helpful. There's not a lot going on anymore. That's why I bought it down here. So my entry was here. So I traded a double bottom, higher high, higher low, 1, 2, 3. 1 is the double bottom. 2 is the higher high. 3 is, right, the higher low. Okay, that's what I traded. But all of this based on the September M2. So I have like a high level plan, which we'll call strategy, and I have a low level plan, which we'll call tactics. So what do we do here? I don't see anything. Doesn't look like a trade to me. But I'm glad you asked for me to clarify, because I didn't say anything when I looked at it 3 minutes ago, because there just wasn't a trade. So like, here's a pivot point, but it's meaningless. Here's a pivot point, but that's meaningless. Are we at resistance? No, not quite. Are we at support? No, not quite. And using a regression channel, we're at the average price, the mean price. This is the mean. So is it overbought or oversold? No. You see what I mean? So Sarah says the same thing. Should we buy Aussie yen now? No, you should not. How would you justify it? What is your plan? What is your strategy? There isn't anything. So I saw this, and that's cool. Maybe if it came down here, maybe, but not really. I feel like it's forced. So, what's happened over the last 48 hours? Nothing. So, no, it doesn't look good. So if you buy, let's say you're a buyer. What does a buyer do? 1, buy low. And 2, buy support. Not just low, but at support. So are we at support? You could argue that on a weekly basis. You could argue that that's support. But are we low? No. No, we're not low. So, no, there's nothing really to do. So you just move on. Okay, guys? Now, Carly says, taking a look at the charts, all the markets are sideways, nothing's trending. Well, that brings up another interesting point. Okay, so let's say the market's been doing this, and now is doing this. Is this meaningful information? Yeah, because now, much more than this period, the next period could possibly be this way. Because whatever created the downtrend has stalled out, lost its momentum. So now it may just come back. Half of it's profit taking, the other half is new speculators. Okay, so how do you reverse a trend? Well, it starts with consolidation, doesn't it? So like Mr. Elliott Wave, Mr. Wave would have said something like, we need a 3-wave correction first and then work our way back down. So the trend is this. So let's do that. Yeah, well, I'll leave it here. Let's see. So this is the move. Would anybody agree with that? That's the only thing happening. And everything else on smaller time frames is basically just noise. Okay? So what does that mean? Well, going in on a smaller time frame, you'll probably see something to this effect, and then back down. And then I would say, well, you know, if that's the case, this will be very technically important, this level here, because it's part of swinging. And this level here is going to be very technically important because it's price action. And what is it that I trade? Price action and pivot points. Okay, you understand? So you have to get good to say you're short-term long, but long-term short. Okay. Now, who said it? Chuck says if you are a bear. Well, even if you're a bull, there's 100% chance that when you get into this area, your bullishness will be challenged by market participants. 100% chance. Or at least that's how you should think. So even if you're a bull, it ain't going straight up. There's just no way. So like, I would almost plan this if I was a bull. And when I see a very, 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 very bearish market, I assume we need a ginormous double bottom. An obvious, not one that happens over the course of a day, but it happens over the course of a month. We need to get every single bear out of that market to turn this bullish. So we need a ginormous double bottom, which ends up on a smaller time frame. You end up having a double or triple bottom here, and then this is a double or triple bottom there, right? And so you get double bottoms that, you know, double bottoms of double bottoms, because you got to get all the bears out. So that would mean all the way up, all the way down, and still failure, and then all the way up the rest of the year. Okay? So rally up the third week of August, try again the third week of September. Okay. Okay. Whether you're bullish or bearish doesn't matter per se. The support and resistance will be respected. Because you might be a solid bull and can give me 9 reasons why, and that's very good, but there are solid bears too. And that's a really interesting trip that you have to go through to realize there isn't a right answer per se. You decide whether you're a bull or a bear, and that determines where you buy and where you exit, or where you sell and where you exit. But if you play it right, bulls and bears in this market will still make money. Now, bears are probably going to make a lot more money, but once again, that's irrelevant. It's not your genius that made more money. It's not your alpha per se, right? It's not your alpha that made you more money, right? No, it's the beta that made the more money. If you were a bear and the market was bearish, it's not that you're a genius. You sold in a falling market. You're not a genius. And bulls that know how to buy still buy at support. They buy low at support, so they did their job. And the beta made it so that they were not as profitable as they would have been if the market was bullish. So it's not your alpha that determines your success. It's your beta. Your alpha probably has more to do with your risk management than anything. But it doesn't determine how much money you make. Okay. And of course, if you don't have a bias, you're not profitable. And so what you're doing is transferring your wealth to either the bulls or the bears. And yeah, that's that. You transfer your wealth to someone that does have a plan. Now, why do you need a tight stop loss, pure mathematics? I've never told you to do that. Okay. So just be careful, pure mathematics. You're throwing stuff out, and I think you did this yesterday too. You're throwing these statements out like 100 times leverage with tight stop. You're throwing these statements out, but correct me if I'm wrong, you've only been trading for 5 months. So I'd rather you just tone that stuff down, because I've never once given that advice. So, you're competing with my audience and you're confusing the message. So be careful. Just stop doing that, okay? You can interact and all that's cool, and I'm happy to answer your questions and stuff, but stop throwing out these statements, okay? I only have an hour a day with our crew here. I don't want mixed messages. That's all. Let me give the advice, huh? Oh, Bash USD CAD. I think I have it here too. Yeah, okay. Well, your stop loss should be at the lowest low if you're a bull. Okay. But I don't think I have the chat's going by too fast. Hang on. Who asked the question? Hang on. What happened to Bash's question? I was answering Bash's question. Now it's gone. Trying to figure it out. Barry, did you block Bash K? I was answering his question. Now his question's gone. Yeah, but I'm wondering why. I think he said something about the USD CAD and that he's lost. Why was it? I just missed it. Was it something he said earlier? He asked it looked like a legitimate USD CAD question. Oh, can we at USD? I'm lost in its direction now. And then he said, yeah, that's the move. Message was deleted by USD CAD. Is it supposed to fall or continue with its bull run? My Sunday, for him it's a sell. No, that wasn't Barry. But that's okay. That was pure mathematics. Anyways, let's get back to this. So Barry, if you only block people that are posting spam like Mr. Gene Hackman is my mentor. You should use his Telegram message to make millions. Or, Wayne, you're such a loser, scumbag, scam artist, whore. Yeah, blacklist those guys. But everyone else is cool, okay? Because I might be a whore, but I'm not a scumbag. All right. Oh, wrong color. La, 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 la. Just doing my work here, guys. Boom, 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 boom. Boom, 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 boom. Okay, so we're caught up in here. So what I like to do in scenarios like this, and of course it depends if you're a bull or a bear. If you're a bull, I like to wait for the breakout, pull back, long and gone. And yesterday we talked about trading into the apex, and the closer to the apex you are, the less likely there's a fake out. So the other move that you could plausibly trade would be something like, I guess I'd do it this way. Okay. I prefer the breakout in the direction of the trend. Okay. Sure, Benjamin. What pair and what's your bias? You're bullish on gold. Okay. La 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 la. UTI. Thought we had gold here. Oh, here it is. All right. Can I use this chart? It's in the swing trading course, Jeff. fxbootcamp.com. Okay. Well, this is almost blank. But see, you have to understand, Benjamin, I use two things. Price action, pivot points. I'm not using all pivot points like yours. Okay, you should be. If you don't use pivot points, you're not going to be as consistent. Pivot points tell me the tops and bottoms of markets before it's happened. Well, I couldn't fathom why you would want to trade without that knowledge. I really don't. Signals? What signals? No, if you take the swing trading course, then we do our trade planning together live. But I don't give signals. I don't tell you what to do. We do it together. Okay? Yeah, I don't give signals. But I'll tell you what, if you have $50 million, I will trade your money for you. I will charge you 20% of the profits and a 2% management fee. And then you won't need signals. I'll just do it for you. It's just faster and error-free. All right. Let's do it this way. I have to have the pivot points. Okay, Benjamin? It doesn't make sense to me that you would not have a leading indicator. And then, of course, price action in and of itself is a leading indicator. And the reason I say that, maybe you guys missed that point, but when I say up, 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 when it comes atop like this, where it's been up and now just starting to turn down, I always look left and I drag it across, and that's my new buy zone. So I know in the future I'm going to buy around here. Even though we're still way up here, I know I'm a buyer here. I know my price zone already in the future, and that is therefore a leading indicator. Okay? So that's why I call price action a leading indicator. So anyway, so down, 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 I buy it. Up, 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 up. What do I do next? Drag this across. There's my new price. That's where I'm going to buy in the future. Down, 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 up, up. Okay. Now this is pretty far away, right? So I'll probably use Fibonacci and look at like a 382, 50%. Oops, 50%. This is a 38. This is a 50. This is a 62. Okay. And I'm going to use some other things, and I'll probably start to use pivot points too, but I'm trying to only focus on the price action right now. Oh, come on. Okay. Oops. Okay. But that's typically what I end up doing is I find some other reason to buy somewhere around here. You can see it's the bottom of a bearish move on a weekly basis. You can see there's a sell zone, there's a take profit zone. And then this is a buy zone on a bull. This is a 50% or whatever. So there's a lot of reasons why using leading indicators, you know you're going to buy around here. And then up, 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 right? There's your new buy zone. Okay. So price action in of itself is a leading indicator. If you don't know price action, you will fail miserably as a trader. Do I make myself clear? Let me say it again. If you do not know how to trade with price action effectively, you will not succeed as a trader. You will fail. So if someone taught me that in the early days of trading, I would spend a year trading price action and I would master it. Okay? So I don't know what you do when someone that has been working hard at something for 20 years gives you advice. Most people say, oh, whatever, I'll figure it out on my own. Well, good luck with that. Okay. What are the gray boxes? These are the pivot profit zones for the monthly basis. This is the projected low for the month of August. This is the projected high for the month of August. Okay. So what determines where you go is your bias. So any bull, so let's say last month you were a bull on gold, okay? On the first day of the month, this is the zone I wanted to be a buyer. And since I'm a buyer, I know the price. I have two plans actually. Let me change it so it makes more sense now. I have two potential prices. I have this one here, that's plan A. This one here, that's plan B. I'm a bull, I'm a bull, I'm a bull, I'm a bull. There's nothing else to discuss or talk about. In fact, I actually set this big trade up here. I don't know if you guys remember it, but I actually set this upward move And I drew the arrows and the, everything. We set it up a week in advance. But based on this knowledge, okay, the trade plan for August. And by the way, there's at least 100 people who have taken my swing trading course, probably 200 people. And they will tell you for a fact that if you're a bull, this is a ridiculously obvious, childish trade plan. Like, it will not get any easier than that. That is the easiest version of swing trading. This is your buy zone. There's the projected top. Look what happened. Can anybody back me up on that? Is that a basic, as basic as you could possibly get, bullish trade plan for monthly swing trading? That you could do that in your sleep. Like, you're like, please, come on, Wayne. It's like throwing a free throw. You're like, this is basketball? Like, no. Basketball is a little more complicated. But you're like, I have to stand at this line and throw a ball into a net? That's it? Like, no. There's others, but if you can't do that, the rest of basketball is going to be very simple, or impossible, we should say. So anybody could do this probably with their eyes closed. Cool. So now you're asking me, well, Wayne, give me a clean trade plan and stuff. Well, it's already done. I'm sorry. There's really nothing to be doing. But what did Wayne do on the yen pairs? What did I do on the yen pairs? Really several days ago, last week. What did I do that you could take away as a possible lesson? Thank you, baby doll. No, more specific than that. No, what did I just show you on my yen pairs? I want to see that you're taking notes, for crying out loud. Come on, guys. I started planning on next month's pivots. I'm already in September. I don't even know what the date is. Like, again, it makes me kind of chuckle sometimes. So it's August 20th. So several days ago, I entered trades based on my analysis of what the market might do next month. And some amateur is walking into their charts right now looking for a trade. Wonder what's going to happen today. Should I buy this? Should I sell this? And I'm already on next month, and I've already put the trades in, and I'm already profitable, and I already have moved my stops to break even, and I'm already collecting positive swap. I'm practically done for September. Of course, there's going to be a lot more trades than that, but you get the point, right? Like, what was the plan for August, for gold? Here and here. So what do I do now? You know what? August has been done for over a week. Well, no, approximately a week. The month of August is already done. The money's already in the bank. The trips to Vegas already booked, right? Like, done. So it's more like, what's next? And so I'm really drilling down on this question, right? Start with the clean chart and all that kind of stuff. Oh, this is a clean chart because the easy money has been done. People that know what they're doing have already made the money, and yeah, they're on their way to Vegas right now to celebrate. In fact, they're probably already there. So what's the next move? Plan A, Plan B. Okay? So if I just said, oh, well, you should buy here, it does nothing for you. It doesn't mean anything. Okay? It means nothing. If I said, hey, you should probably buy right here, it's just meaningless. If you don't have knowledge or education, like, how do you play furry lease? Oh, here's the sheet music. Right? There's so much more to it than that. Imagine if someone gave you a written copy of a stand-up comedian's jokes, and they're like, see, just get on stage, tell these jokes, you'll be funny. It's gonna be horrible. So like, if a trader says, if you ask a trader, so you ask me, Wayne, just tell me what to do, give me a trade. I'll say, okay, look, I find that interesting. Okay, good luck with that. Because it's a little more complicated than that, right? So anyways. So that's all I need. I don't even have moving averages. I got this one here. I don't need it. Let's get rid of that one. Okay, so I don't even have candles. Okay. So if I said, if you were able, let's get rid of this. If you were able to buy here, and then able to move your stop to break even, I think you should make 500 pips. Okay. Why? Because I think if you don't get knocked out here, you're going to be long until the third week of November. And you're getting sick of this third week crap, right? But there's a reason for it. It's called Thanksgiving. So my first target is Thanksgiving. It's not a price target. It might be 1,500 pips for all I know. Probably not. Okay. But I'll tell you what, if Trump announces a deal with China and a date to sit down and sign the deal, you're going to make 500 pips in this week. You understand? We don't know if that's going to happen. Walter, how long does it take to get the swing trading course from South Africa if I buy it tomorrow? It's online, Walter. So you could buy it tomorrow and start it tomorrow. Okay. But guys, why do I say this? What is it? Like, is there anything on this chart that tells you that if your stop is here, you'll either, and you get your stop to break even. So there was an obvious reason you should have bought this if you were a serious gold trader. And once again, like, if you know basic trading, you probably already know what all of that is. But if you don't, if you were able to stay above that line, why would it go up for weeks and weeks and weeks and weeks and weeks and weeks? Well, there's some knowledge, right? There's some knowledge and some experience and all of that. And this is important why we need to get you to stop losing money as soon as possible. If you're in a situation where you're losing money, consistently losing money, you're not going to get to year 5 or year 6 or year 7 or year 8 or year 9 or year 10 of your trading. Imagine how good, if your full-time job, by full-time I mean it's the one thing you eat and sleep all the time. How good do you think you'll be in 20 years? Well, here's the interesting thing. The difference between year 10 and year 20 is probably minor. Minor's probably not strong enough of a word or something. Like, you'll be better. Let's say you'll be 15% better. But only because you got some more skills and you have more probably fundamentals and stuff. But what's the difference between year 5 and year 10? Probably 200%, probably 400% better. My point is the way that you are probably trading now that brought you to our community, you're not going to make it to year 5. You understand? So we got to get you to that point where at the very least you need to start asking the right questions and start implementing the right behavior. You need to start having business planning retreats with yourself. You need to spend significant amount of time on your own trader psychology, as well as your business planning, as well as your trade planning. Really start getting into these things, because I think a lot of traders at best, they buy here, and as far as they're concerned, this is as far forward as they're looking. And I know this is gold, but let me just pick on something. Like, they're super happy if they make 25 pips. And they call that a good day. And then tomorrow they're going to try to make another 25 pips. And then the next day they're going to try to make another 25 pips. Have you ever added it up? Like, what is the likelihood you're going to make a living if you're doing 25 pips a day? Have you ever tried to do it? Like, literally bust out an Excel spreadsheet. Day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, day 10. And then you start actually adding the numbers up, and they look all right. And then I said, okay, what's your winning percentage? And you're like, dumbass, I said, what? What is your winning percentage? Dumbass, I said, what? Like, if 65% are winners, then what? Okay? You see what I mean? All of a sudden it's less and less and less, and it never really ends up making a lot of money. Okay? So you're like, well, I'm averaging now 18 pips a day. How much money do you need to make to live and take care of your kids and pay your mortgage and keep your car maintained and buy health care or medicine and take care of grandma when she gets sick and replace the roof when there's a storm? And you're like, son of a bitch, I gotta have like 22 standard lots on this. Right? Because it's just it's not enough. It's not enough pips. And when you don't make enough pips, but you need to make money, you need to make bank, you start jacking up your leverage. And by leverage, I don't mean 100 to 1 or 500 to 1. All that is really, to me, irrelevant. What I mean is the lot size relative to your account size. Okay? I used to have a rule, and this will give you a better example. Okay? I used to have a rule. 1 mini lot for every $100,000 in cash I had in my account. I bet you a lot of you guys are trading 1 mini lot and you have 1,000 in your account. Am I right? I know I'm right, so you don't even have to answer. So you're taking 100 times the risk. I'm not saying mine's better. I'm just saying there's a difference. Okay? There's a difference. Now, one of the differences is because each of my trades are so small, I could lose 5 in a row today, and it's meaningless. Makes no difference to me because my risk is so small. I have less risk. If you lose 5 in a row, you've had like a bad month, right? If you lost 125 pips today, that's going to hurt, right? Right? You lost almost 13% of your trading account. Oh my God. In one day. Oh my God. That's like a horrible, horrible month. You may never, ever be able to raise money for a trading fund ever again because you lost 13% in a day. 13% is so bad. If you lost 13% in a month, you've probably thrown your career out the door and no one will ever invest into you again. You see like how traumatic the lot size is and stuff? But it also gives me the ability to say, well, what happens today doesn't matter. It's really irrelevant. If I get some good trades in, cool, I did my job. It's really irrelevant. If I had a bad day and the market got choppy or some news came out and blew my trades out, you know what? It's just like shit. And I go smoke a cigar and feel really bad for about 2 minutes, right? But what I'm trying to say is, like, I'll get a trade and I'll get it on, then I'll go find another trade, get that on, 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 right? But if I get things right, then that means my alpha matches the beta. Okay? I'll just throw out a number there. I'll make 10,000 pips in a month. Okay? Okay? And, right? Cool. And is that occurs a lot? No, it doesn't occur a lot. But it's 10%, right? I just had a plus 10% month. When was the last time your retirement account or your mutual fund gave you 10% in a month? And the answer is never. So you might do 10% in a trade and you're like, Wayne, I'm so much better of a trader. Dude, the only way to make that kind is to either be extremely right or you took risk. And when you later on in life, when you start looking for investors, they're going to do risk-adjusted performance analysis and see that you're a wild cowboy and that's how you made your big money. But no one wants to see plus 10% in a month. It's too much. But every once in a while, you can explain it where you're like, well, I spent 3 months building positions and then they all hit. You're like, oh, okay. But what if I start taking trades and after a week goes by, you know, a lot of them get knocked out of break even? Well, I collected some yield. And I never was in a situation where risk was fearful. I moved my stops and all that kind of stuff. So the money was never in jeopardy. And I had the opportunities and it didn't work out. Okay. And then, of course, very often after you get like a bunch of trades going, after a while, what you do is you move your stops and protect, 50 pips each, even though they're up 200 pips each. And whatever, you move your stop a little higher, and they all collapse, and oh shoot, you only made 2,000 pips that month, and it really didn't work out, and you're very disappointed. Okay? Does that make sense? The number one goal is try not to lose money, but you have to take risk to get into the market. So if you're a bull and you're buying low at support, okay, great. Put a stop. And once you got some profit, move your stop to break even, and then let it run. Let it run. Okay, trick workers. Okay, Barry, tricks worker would be probably bannable. Okay. You see what I mean, guys? Let the winners run. 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 The only way to get into that area, guys, is for you to lower your lot size, get good trades, think beyond today. Do you think, for example, let's say the entire company of Apple computers, they have not thought about tomorrow or next week or next month or next quarter or next year? They're not doing any research and development. They're not building new things. They're not trying to improve their efficiency in their manufacturing, supply chain, all that. That they just literally show up to work and then they're like, what should we do today? And then they talk about it around a table. What do you think we should do today? I don't know. I was thinking about making some iPhones. Like, that's a really good idea. Let's read, you know, like a business knows what they do. They do things like competitive analysis of the market so that they know what their customers want and the price points and stuff like that. And they can start building products and services that are needed and demanded by a customer base. And then they have to make their product or service better than the competing products and services. And they go out and they compete. And so this takes research, this takes planning, this takes investment, this takes focus and a manifestation of the focus by some sort of action and all this kind of stuff. So why would trading be any different? Right? And the interesting thing is, it doesn't matter if your bias was right or wrong. Okay? Because the questions are always different, like, should you be a plumber or an electrician? Should you be a bull or a bear? Sometimes the plumbers make more money. Sometimes the electricians make more money. But they both have skills. There's usually a demand. And they go to work, they provide a service, and they get paid. Okay? That's all Forex is. Are you a bull or a bear? You don't change every day. Every day, should I be a plumber today or an electrician? Right? That's what they have in India, by the way. Right? Something goes wrong, your air conditioner breaks. So you call some dude and he shows up and he tinkers on your air conditioner with some sort of weird tool for 3 days, and finally he fixes it and you pay him $1. But it's very inefficient. Probably why India is a third world country. Now it's really great if all you have $1 is some guy will fix your thing. But here you get electricians and plumbers, and you know there are no jack of all trades kind of people in America, right? The foundation guy comes out. Well, the grading guy comes out first, then the foundation guys come out, right? And then the framing guys come out. And then they bring out the plumbers and the electricians, and then they're done. And then once all that's done, then the insulator guys show up. And then when they're gone, then the drywall guy shows up. And then when that guy's gone, then the trim work guy shows up. And when that guy's gone, the painter guy shows up, right? So on and so forth. So you just like, where are you when your billionaire client or millionaire client or rich uncle or whatever, they're the homeowner. They're the ones that are paying for all of this, and they have a vision in mind. Now, the thing is, if you're the trim person that does the crown molding and stuff, you need to know where you fit in, right? You need to know where you fit in. You're a foreign exchange trader. So you show up, you're like, yeah, I'm really good at trading. What is it you do? I don't really know. I figure it out every day, but I'm pretty good. Like 65% of the time, I can make 25 pips. So I average about 18 pips a day. Okay. Versus someone that says, well, I'm a macro trend trader and I've analyzed the global markets and all the central banking policies around the world and the economic data behind each economy. And I have a 5-year vision moving forward. It entails this, this, and this. And I play that out through the Japanese yen, the Swiss franc, and the US dollar. And here's how I think the next 6, 12, 24, and 60 months are going to go down. Now, the farther out we go, the more things can change over time. So I have to stay on top of the economic data and central banking policies as they undoubtedly change. But here's what I would do with your money. Boom. Okay. Or you're pitching a business and you say, all right, you tell me the currency risk of the top 3 currencies that you do business in. What are they? The guy says, well, we do a lot of business in Europe, so we got euro. We got to do a lot of business in the UK, so we have pound. But we're also starting to move into Latin America. Right? You're like, well, which countries? And is it Brazil? Is it not Brazil? Or is it Argentina? Where are we going? Or is it Caribbean? Like, is it Caribbean dollars that are pegged to the US dollar? Like, so you start figuring all these things out, right? And so you could say, well, I will design for you a euro hedge fund or a pound hedge fund. But we use something called, right, smart hedging. They're like, ooh, what is that? I say, well, dummies, they traditionally hedge you. You call up some firm, you say, I'm exposed to euro on this euro deal that we're doing. It's $10 million of exposure over the next 3 months. And what they do is they hedge it. That's it. They just throw down a trade, anti-your thing. They just simply lock in price, walk away, and you got to pay them for this service. Say, but what if the change in fluctuation in the euro over the course of time actually benefits you so you make more money? You don't face the risk you're worried about. It actually benefits you and puts euros in your pocket. If I could get this for you, would you be happy? And they're like, hell yeah. Well, let me tell you how we can do this and blah, 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 blah. And now you're like, wow, dude, you're a professional. And what you're saying is, if you bring me in approximately the 10th month of your building project, I want to know that the drywall guys are done. And at that point, I can come in and we will start with crown molding at the top. And I mean the wide stuff. And what I like to do with my style is I like to have a bottom piece, a top piece, and then another, and put them in, and it makes it look even bigger. And then I like to have a trim piece around, just, okay? And then we're going to put, then we're going to put stuff at the bottom to match, right? So a little piece, a big piece, and then the quarter round clover at the floor level. And it's going to look beautiful. Now, in this room over here, it's much more formal. So I'm going to put in a couple more things here, and then I envision that we do the chair rail and then do the boxes. Now, we can do just box with trim, or we can really bring it out and make that lower piece, below the chair line, make that really 3D, make the wall actually pop out and then go back in and then put trim all around that. And of course, match that up. Hi, what do you think? And they're like, that sounds really good. That's just my vision. You're like, okay. My point in telling this story is they know where you fit in and you know what you do. If you can't do that as a drywaller, as a painter, as a roofer, as a window guy, as the insulation people, the concrete people, the grading people. Like, if you don't know what you do or have an expertise to explain what you do and how you fit into the project, you will not get hired. And you will be a very skinny, very hungry drywaller, right? Actually, drywallers are all skinny. But anyways, what is it that you do as a professional Forex trader, right? And that's where I'm trying to get you, where you're like, okay, you know if you're a trend trader or not, or you know how to analyze the markets. You can talk about the fundamentals. You know what? Actually, when you work with clients, no one wants to see your charts. I mean, you might show it, but no one's going to ask questions. It's meaningless, don't you? Like, so you can't just say you're a scalper and you do this and do that. You can scalp your own account, but it's really a horrible, 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 horrible way of trading. It's good for filling time, but it's a really horrible way to make any money. Okay? So I have to convince you, this is what I'm doing. I have to convince you to analyze the markets well, technically and fundamentally, get into your trade, and let all the winners run. Okay? No. Morteza, what I'm trying to tell you is if you made 10% in a month, that's too much. That's too much. You've made too much money. And you probably don't get it, right? You probably don't get it. But when you work with people with money, they understand that for you to make a profit, you have to take a risk. And the more profit you made, the more risk you took. So when you talk to someone that's got let's say $100 million, they're not really that interested in you making another $10 million because nothing changes. So what happens is they're more worried about you losing, okay? And they have to beat inflation and they need income. So if you only have $100 million in cash, okay? I know people that make more than that a year. Let's say that's your net worth. What's your number one thing you need? You need to beat inflation. So beat I, and it looks like a T or something. Anyways, beat inflation and provide income. See, only poor people spend money. You understand that? And if you're poor, I'm really sorry. I'm not insulting you. I'm just telling you the fact because, right, you spend money. Wealthy people don't spend money. They put $20,000 into their gas tank for their boat. This actually happened to me one time. I went out on my friend's boat, and it was like a weekend. He says, spend the night on my boat with us. It'll be really great and stuff. So we go out there, and he's like, oh, man, I got to fill up. So I'm like, hey, well, I'll go with you. I'll be your co-captain. And he's like, he's like, they're not called co-captains. But anyways, let's go. So anyways, he goes all the way out there, and he fills up the tank. And I said, hey, just curious, man. I don't know anything about boats, so like, really just curious, you're out here all the time on your boat. When you fill up, what does it cost? He's like, it's $20,000. I'm like, what? I might be wrong. Maybe it was $2,000. I'm gonna say it was 2,000. 20 sounds like a lot. But anyway, so every like 2 or 3 times a month he fills his tank, right? So it must be 2,000. But it might have been 20. But anyways, let's say it's $2,000 for the gas, right? Now, The poor person takes it out of their wallet, right, and stuff. But what happens is, if you're wealthy and you got this 100 million, it's invested in such a way that income is provided. Okay? But they have to beat inflation because, you know, if you don't beat inflation, then what happens is in 10 years it costs $3,000 to fill your gas tank. Okay? But what happens though is this pays for the yacht. This pays, I shouldn't put we should do it this way. I'm off topic here. Let's get rid of this. Let's say it pays for the sports cars, the boats, the travel on if you do your private jets or you go to Europe for 3 weeks, the apartments, you know, all that kind of stuff. All this comes from their $100 million. And you're like, one day I want to be filthy, stinking rich, and I want to have a fast car, and I want to have a boat, and I want to travel and see the world. I want to have beautiful homes and apartments everywhere. And right? And what happens? You spend the money and it's gone. A wealthy person gets all of that and they still have their 100 million. So your job is this. Okay? But an apartment building can do it. Okay? So you have to compete now with an apartment building. If they bought a $100 million apartment building, every month they can expect expenses, but the expenses are very planned, if you will. Even the unplanned ones are planned. Like, you know, every 24 months, the elevators need maintenance because otherwise your certificates expire. And the roof has so many years left on it. The pipes have so many years. The electrician, you know, and the air conditioning and the heating and all these reviews. And then you have insurance for a lot of things. And, you know, and then the gardeners and all that. I mean, most of it, I mean, I'd say all of it is all on a spreadsheet, all mathematical. You know exactly what it's going to cost. And then you have insurance for the weird things like something crazy happens, a spaceship falls out of the sky and hits your apartment building. Well, you know, but you have to pay for the insurance. So, you know, you got all of that. And you know you're going to collect rent. And you're left with your NOI, which is to pay for your financing costs, but you don't have any. You paid $100 million cash. So your NOI means you're going to have $8 million a year in your pocket. You understand? But you still own the apartment building. So when you see the rich guy in his fancy car, in his nice suit, the beautiful wife on their way to the Caribbean again, they don't do anything for it. They own something. And I'm trying to get you, we're telling this story to answer something else, but also to go back to this. I want you to think about owning positions. Because I'm trying to use this story to say that you need to treat Forex like a business. This is a business. You need a long-term vision. You need, right? You need assets. You need a point of view. You need a product or service that you offer somebody. Do you understand? This is what I do. This is what I can do for you. And I'm very, very good at what I do, but I'm also very, very expensive. Right? That's what you need to tell somebody. And then they look at it, they're like, I know what you do. I think you fit in my portfolio. I think I have some money for you because I got some allocated to real estate, and I got some allocated to the stock market, and I got some allocated to hedge funds, and I got some allocated to gold, and I got some allocated to this other stuff. And like, I see that I can put some money toward Forex. Or you talk to a business, You know, like I said, I know a guy, he does billions and billions and billions and billions of dollars a year in chicken. And he said to me one time at a board meeting, he's like, Wayne, sometimes I don't know if I'm in the protein business or in the commodities business or currencies. I think you said the currency business. And I said, well, there is no difference, right? McDonald's only sells hamburgers and French fries to pay for their real estate. Okay. So in this case, what I'm saying is, what if you owned a trade as an asset? Okay. Then you're going to try to make more than 25 pips, right? What if you looked for trades or start looking for trades? Or what if you did this? Because you're on a demo account anyways, if you're not profitable and all this. I'm assuming you're on a demo account. Otherwise, I don't know. Different strokes for different folks, I guess. But what I would do is I would pick a bias. Wait, I've been telling you this every day for 20 years. Well, let me tell it again. I'd like you to pick a bias. So you're going to buy all Japanese yen pairs. That's it. Is an example. That's all you do. Okay? And you're going to have a 50 pip stop. So it should be a minus. You're going to have a 50 pip stop and a 1,000 pip limit. Okay? You'll buy one today. Maybe you'll get another one tomorrow. Maybe 3 on Friday. And you just keep doing that. Once you're up like 50 to 75 to 100 pips profit, you move the stop to break even. You remove the risk entirely. You cannot lose money. You either make 1,000 pips or you make 0. And see if you make more money this year than you made last year. I bet you destroy what you did last year, or you make nothing, which may actually still be better than what you did last year, right? So we'll get you there, guys. I know I'm being, I'm taking this to a different level. But I'm trying to, like, wake up the sleeping giant inside of you. And I need you to think big, sophisticated, rich. I want you to think like a business person. I want you to think about the product or service you will offer to someone with money. Okay? Because, and let me say it again, if my rule of thumb is 1 mini lot for every $100,000 in cash, and you don't have $100,000 in cash, then you're taking on significantly more risk, right? So the way around all of this is one day you're going to have to convince somebody to give you money. And the nice thing about Forex is if I bought, let's say on gold, well, again, this is not a good example because they're not, but anyways, they're contracts. But anyways, let's say if I bought 1 mini, 1 standard, 5 standards, a big, 1 big, that's a 1M, 5M, 5 bigs. Is it any different work? Is it any different analysis? You understand? It's the same analysis. It's the same work. It's the same. And ideally, if it is all the same percentage based on the money in your account, it's the same amount of risk. And so what happens is you start collecting 20% of the big money plus 2% of the big money. Okay. So like, for example, wealth managers. Does anyone here have a wealth manager? Okay, I do. Yeah. Okay. And a friend of mine is actually a wealth manager. He worked for a big firm and he just went independent recently. Let me tell you how it works. The smallest one I've ever seen is like 100 M. That's small. I think typically it's 300 M. If you're a small local yokel, you think you're smart, but you have a degree in sports marketing or some stupid thing. You're not a PhD economist. Okay? And they make 1% of that. Yep. Now from that, you got to pay your big stupid firm. So you're actually only taking home 0.5%. I know, boo-hoo, right? Then you got to pay for your staff and all that kind of stuff. So at the end of the day, these guys usually tap out around $400,000 a year. After paying for staff, after paying for the firm, after paying for all this other crap, they usually take home $400K. And they have like a sports marketing degree from, Eastern West Virginia Community College. Yeah, 100M is very small. If you don't have 100M, what happens is they put you in with some other firm and you work as their bitch for a while until you get enough money where you're like, I'm going out on my own. Or you buy their book when they retire. But seriously, that's how it works. Am I a wealth manager? No. So these guys are great because they sit down, they plug your numbers in, and they say, are your kids going to college? Yes. What year are they going to go to college? 20, 25. Okay, well, there's no inflation in the United States. Everybody knows that, except for education and healthcare. Education's growing at 8% a year. So where are your kids going to go to Harvard? Go to school? Oh, one's going to go to Harvard, one's going to MIT. Okay, so looking that up, it's, so you're going to need, let's say, $75,000 a year per kid, $150,000 a year times 4. So you're going to need $600,000 in cash to send your kids to college. Okay, cool. When do you want to retire? I want to retire at 70. Okay, so and what kind of lifestyle do you want to live? Are we talking about models and bottles and airplanes and jet planes and stuff, or Winnebagos? And you start like planning that out. Okay, so you want to live on $300,000 a year when you're retired because you already own a home that's paid for and you already own a beach house that's paid for. So you can just live on that. Okay, so that will allow you to do 3 trips per year. And that will allow you, savings for some money when you might get sick around 80, 85. You could get sick and, you're going to have some special healthcare stuff. And so you start planning it out. So to get to these numbers, right, you're going to need to save this much here, and you're going to pay for that there, and you got to do this, and you got to do that, and you got to do that. And you never have enough money, right? Right? So it says, no, I'm totally serious. I don't know why you're tripping up on the 100M. But anyways, they do their job and they say, okay, well, we're going to design all this. So we're going to take care of the college fund, and we're going to take care of this tax plan that we're going to do here, and we're going to set up your estate, and we're going to buy these mutual funds and ETFs, and we're going to do this, and we're going to do that. You know, I just do it because it's good for diversity. But anyways, my point is you need to think like a business. You need to think like you're offering a product or service. You need a vision for that. And then you need to actually carry that out. You need to do it. You need to show it. You need to act it. You need to behave that way, that you are a professional. And here is what I do. And if I sat down with you, you'd bust out a whole PowerPoint presentation and say, let's go through global macroeconomics together. Here's what I think. Here's this other thing. Here's what I would do over the next 12, 24 months. Here's my 5-year plan for the fund. Here's what this fund does. Here's what that fund does. Okay? Okay? Does that make sense? So that's my challenge in these free webinars. I need to provide enough of everything, some technical, some fundamentals, and some psychology. I know it's a mixed bag with the webinars that way, but we don't have a lot of time. Like it's been an hour and a half, right? So we covered a lot of different topics. But when someone says, just give me a clean chart and just tell me what to do, it's such the wrong question, right? Where I'm already on next month and it's the 20th. Well, how could I already be on next month? I'm actually on the month after next month. I'm actually already thinking the 3rd week of November. I'm already set up for, well, I'm not setting up, but I'm preparing for next year. Okay? And if you managed a business that had exposure to foreign exchange risk, I could offer you a service and be able to carry that out. I could be able to sit down and discuss it with you and carry it out. So you have to understand what is it that you actually do, right? If you trade your own money and you like playing Forex like a video game, great, cool. But if you want to get to that next level, you gotta know what you're doing, which means you have to have a vision, right? Right? What does your trading business look like 5 years from now? Goldman Sachs or Goldman sucks? Which one is it? Bitcoin or shitcoin? Which one are you? I don't see horns on your head, son, so which one are you? So anyways, hey, have a lovely Tuesday. And I will see you Wednesday, Thursday, and Friday. Peace on earth. May the pips be with you. May your profits be above average. Please visit Trader's Way. Open up an account. Down here, you have the links to my chart templates. And by the way that's going to work is I'm setting it up so it's going to be like a chart of the month club. So I'll give you my chart templates for free and stuff. But every month, if you want to continue for a small fee, every month what I'll do is I'm going to send out another cool tool that I've checked out and tested and tried and really see sort of a value for. And I'm going to pay someone to review it and write a nice article about it, on a PDF to, how do you install it, but also all the different ways to configure it and setups and all that. And then I thought I'd do a video on how I use it to trade and all that kind of stuff. And every month you get like sort of a new cool trading tool of the month. So that's what I'm doing. I think it would be very interesting, and it'll keep me open-minded to keep revisiting things, So I don't know, look forward to that. So like, for example, let me clear some of this out. like I remember setting this tool up. Oh, let's get rid of this. Oh, come on. Okay, get rid of that. Oh, wait, you don't see what I'm doing. Hang on. All right, so we got all this, right? So here's just a blank thing. So like I remember when I set up this tool, insert indicators custom, this one. And now I got to go to like 15-minute chart. This one's helpful. I don't teach with it anymore. Where to go? Okay. So I have a better template for this. So these colors are all messed up. So I'd have to create the template again and get that out as part of that thing. But right, like check it out. Here's your daily pivots above. Here's your daily pivots below. Right? Here's the daily central. Here's yesterday's high. Here's yesterday's low. And I believe they're in there, but you can't quite see them. There's the fib levels too. And I use fib levels for day trading. It's part of like my Asian fade idea. And there's a few other things in there, but it's very helpful, especially on smaller time frames and stuff. If you're scalping, there you go. So you can scalp, like, look at this cluster, guys. Today's open, today's support, yesterday's low. Boom, held like a charm. Okay. You know what I mean? And then the other day, like someone said, well, how do you build those indicators? So I'm like, oh, you just do it this way. Boom, 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 boom. Well, I had the right tools, right? So I thought like a low price sort of like trader's tool of the month with an overview on how to set them up, like a real, what do you call them, like document, FAQ document, or you know, the thing like if a programmer was programming something, they also give you a document to describe everything that's in it and all the different settings. So even when you get these tools, no one's done that. No one's created like the how-to document, right? So, you know, I'll pay someone to write it and go through and document and take it all the screenshots and all that. And maybe I'll do a video on how I like to use it and trade with it and why I find it important, maybe why I chose it for that month. Okay. Yeah, more like a manual. Yeah. Maritza says, I've seen so many professionals use the daily pivots and fibs. You know, the interesting thing is when I first started trading, nobody did. Nobody. I used to go to conferences and like no one had even heard of them. But anyways, what do you guys think of that? I'm thinking like $27 a month or something, right? Something affordable, but every month there's something interesting that comes out for you to look at and play with and try. Maybe you like it and you adapt it. Maybe you don't like it, but it's interesting. But, you know, something that's been tested and vetted and improved and somehow I think is useful. Plus you get all my stuff for free, right? But just sort of like an interesting thing to look forward to every month. I don't know. I thought it sounded really cool. Yeah, Jim says, Jim says, sounds great, Wayne. I'm always concerned about getting in a rut and adapting to change. Well, you know, the interesting thing that I end up feeling, and I don't know if it's the same that you have, but I often try new things to keep myself open-minded and inquisitive and all that kind of stuff, but I always end up going back because I realize it's cool, it's interesting, I don't really need it. Now, some of the stuff is quite helpful. So it might stick. You might stick with it and say, I really like this. I'm going to incorporate it in my daily regimen. Like, do you think, guys, that this might be an interesting level? Right? So on and so forth. But anyways. So I'm going to set that up and I think it'll be really cool. That's all. No, I didn't know anything about that. Yeah, well, send it to me, Chrissy. Right. Some of you guys like this template, right? That could be one for the month. Right? And then another month you could get like, what was the one I just created that you guys freaked out about? Is the index one? This one. Another month could be this, and I could do a little lesson on relative strength exercises and so on and so forth, eh? Don't email me screenshots. Email me the indicator. All right, guys, I got to jump. So I'll create that. So at the very least, you get my charts downloaded for free like you had before. But it'll also say, hey, man, but look, there's a lot of other really cool things, and there'll be this neat little service. And if you sign up once a month, you'll get some new love put into your members area with good overviews on how to set it up and how to trade with them, and something that's been vetted and tested by a professional. I don't know. Sounds cool to me. So. Gotta run. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Thank you for being a subscriber. Thank you for being a client. And thank you for being a good human being. I'll see you tomorrow.